Shifting focus to some important macro cues then, and India's CPI inflation for the month of August spiked to 7% from an earlier 6.71% in the month of July. Now, the food inflation also came in at a 7.62% versus 6.75% last month. And meanwhile, India's factory output, or as we know it, index of industrial output, witnessed a 2.4% growth in the month of July. Let's also hear out a word from India's Chief Economic Advisor, Anantha Nageswaran, and he expects the food prices to moderate going forward and also believes that India's inflation rate remains at manageable levels. Let's listen in.
This is to be expected given the base effects that indices normally face, and the market is also probably overreacting, the food markets, to the possible lower sowing on the rice crops, and therefore building in some expected shortage, and therefore the prices are reacting in advance. But as soon as the market comes to know that there are adequate food grain stocks and that the sowing shortfall isn't as big as is being made out to be, then I expect the current spike in the food prices to moderate themselves over time. India has weathered the monetary policy tightening in developed countries very well, and I think financial markets are also quite aware that India has a fairly resilient economy. And while we are concerned about 7% inflation, and rightly so, we must remember that compared to what other countries are going through, our inflation rate is highly manageable and in the middle level of the range that we are experiencing across developing and developed countries.